I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go AskSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the AskSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market's upward surge continued this week as investors' focus was on the levitation of their account balances versus background news that would have historically brought a free fall. Looking back, 2017 to 2019, we saw the U.S. and China trade war bring 6 or 7 pretty big drops, 7% to as much as 20%. That was in 2018 when the Fed was actually trying to pull back on their balance sheet. And now U.S.-China relations, well, they're the worst in decades, as Trump now is banning TikTok and WeChat. And with even the impending possible retaliation from China on with Apple and other U.S. techs, investors are barely flinching. U.S. world economies are in depression. We see actually the payroll numbers jump at 1.7 million this week. And that's in spite of the fact that they were only looking for about 1.4 million, but they saw that as disappointing because that was a huge slowdown from the previous quarter. And the PPP money now going away, and as companies burn through that pretty quickly, and the only thing holding up from total collapse is the funny money from the Fed. And what seems to be the approach of, and maybe the end of pretty soon, of the lifeline handouts from the government. Congress is certainly struggling with that, and we're probably going to see some skinny deal. And it really looks like that could be the last one because nothing could potentially get passed again as far as these stimulus handouts that the government's been doing. But investors barely flinch. The Fed heads are out there and they're singing a chorus that things are so bad that the government better come up with more fiscal spending as they keep coming out and saying that things are basically pretty horrible. But investors barely flinch. The confidence that's built each day as Apple scaled new heights has lifted the NASDAQ. In fact, Monday, Tuesday, Wednesday, and Thursday this week all saw records in the NASDAQ. Now the NASDAQ is up 66% from its March lows. What an amazing thing we saw with that big decline and that big vault to the upside. And SPX, the S&P 500, is not far behind, gaining about 52% since March and is only about 1% from its all-time high. Then, of course, there is COVID-19, which is in a huge second wave all across the world. I think it's a Trojan horse, to tell you the truth, as the huge takeover of the markets by the ever-growing invasive government, well, that's sure to bring more and more massive debt and control of the markets and of the economies and our lives, as this Trojan horse has really given the ability for MMT and policies that we never thought could take hold, well, taking hold. But investors barely flinch. Our analysis for the stock market, based on the patterns that we've seen, and we have very responsive analysis, we believe. We're flexible. As we look at multiple indicators and cyclical patterns, all of that, we've had a picture that has changed, went from a near certain continuation of a bear market to an extension of the rally, bringing, well, likely sharp correction, to higher levels and a longer rally, which caused us to raise our downside targets, And now really the fourth stage to that, where it's likely that we'll get some modest decline, maybe into September, followed by new highs pre-election. Yes, that's a change for us, and we're responding to what we see in the market. Markets talk, and we listen. And media is out. Well, they're starting to publish articles that say that the bull will continue even if Biden becomes president. Maybe so. But gold and silver, they're sending a different message of what is potentially really ahead, with even more government control and a dollar that is collapsing that looks like it will continue to fall on the weight of massive debt. And sometime in coming months, well, we think investors, they will flinch. Just now, there are so few of them preparing for a bear. As a matter of fact, as we see, the energy is simply on fear of missing out as they watch their account balances go up and up, or they watch themselves missing that. Well, that's what actually brings the bear, is when investors finally do get all in. We think that they're not all that far from that, and that, well, there's trouble out there, but it may not be very significant until more towards the end of the year, and certainly will leave in 2021. Stocks for the week, a very good week again, as the S&P 500 gains about 2%, the NASDAQ about 3%, same for the Dow, and the Russell soars about 5%, just huge strength in that lowest tier of the market. Bond market 30 years fall about 3/4 of a point. The TNX, that's the 10-year yields. They're about 55 basis points. They've been hovering in that area, again, a couple basis points for the week. Gold was absolutely surging and then pulled back here on Friday. Even with a $34, $35 drop on Friday, gold still gains $42 on the week, as it made a high of $20.89. Now it's pulled back pretty significantly from there. And we'll show you when we get into our short-term view for the coming week where we think this dip is going. It's a dip that we expected, and if there's an opportunity in that. Silver exploded to the upside. It still is gaining about $2.15 on the week, and that pulls back on Friday pretty significantly. Right now, 61 cents to the downside. So big up weeks for precious metals as they follow a pretty weak dollar. Now, the dollar gets a bounce back here on Friday. We were looking for that also. We talked about that in our Wednesday Future Speak show. And it's about unchanged on the week as it recovers here on Friday. But we have to mention the oil and natural gas market. The oil market is up about 90 cents in the week, and it's down about $2 from its peak. But the natural gas market exploded to the upside. It was the best week for natural gas in 11 years. It's a combination of hot weather and really clean air policies that pretty much look like they're going to spread around the world. We're seeing fantastic numbers and fantastic action out of alternative energy. We did a special video on that, which I want you to go watch in our stock sectors area. And I think it's going to be very informative to you about the huge potential going forward for alternative energy stocks. In the meantime, natural gas, well, if we have clean energy policies that are coming, it will mean a lot of movement out of coal into natural gas. That's what's happening as they get ahead of that, and natural gas could have a much better time of it going forward. So that's it for the opening. I have a lot to show you today, as tons of information we always love to share. And I want you to remember, go to AskSlim.com. Check out what we have in the website. Make sure that if you're watching this on YouTube, subscribe to our YouTube channel. You like it, give it a thumbs up. Follow us on Twitter at AskSlim. And I've got a lot that I'm going to show you. And you want more information on our content and membership info, write to Matt at AskSlim.com. In a moment, I'm going to show you some information on the Golden Cross. There's a lot of news out there right now because the Dow Jones Industrial Average is giving you that so-called bullish signal. I want you to stick around because I'm going to get to that in just a couple of minutes, and I think you're going to find the information, interesting. and maybe something a little better to use than those two moving averages. So stick around. First, I want to show you one thing, and that is the AskSlim Services and Tools for Index Traders. If you love technical analysis and you love trading index equivalent products like the E-minis or E-mini micros for the S&Ps or NASDAQ 100 or Russell 2000, or use the indexes as a proxy for your general trading plan, you're going to love our Level 2 services. I'm going to show you what's in there right now. It's just amazing. We have technical analysis services that support multiple trading styles and time frames, from intraday trading to swing trading with an outlook of a few days to several weeks. Our unique analytical methodology brings a proprietary combination of cycle, momentum, and trend studies. Our handcrafted charts, and I'll show you those, work to reflect key levels in terms of support and resistance and breakout levels, along with upside and downside projection areas. Our chart work is meticulously done to help conveniently support and streamline your trade planning efforts. Let's take a look, because what I want to show you is what's included in Level 2 for people that are active in the index markets. So what you're looking at right here is the this is called the SIR Intraday live stream. People that subscribe to Level 2, 3, or 4 get this. And what you get is a chart that has the S&P 500, the NASDAQ, and the Russell on 15-minute bars. This is set up for shorter-term traders, swing traders, and it gives you a wealth of information. The yellow zones right in here are called acceleration zones. This is yesterday right over here on 8/6, so you get a feel for what it looks like at the end of the day. And the acceleration zones have a very, very high probability of it moving up through them when they get into them, and you can see how that worked here. Here you could see it just didn't quite get here, and it shows you how much weaker the Russell was yesterday. That's one of the great things about using this particular tool, because you get a great sense for, if you want to buy, which are the strongest, if you want to sell, which are the weakest, and if you want to do a pair trade, well, it's right there in front of you. Also, we give you the key support levels. You can see what happened as it touched them right over here and right over here. The key resistance levels as it got up right into there right at the end of the day. And right over here, these kind of turquoise blue areas are up here in fib projection zones. What happens when, well, we get into new highs. So you get great information on here, support, resistance, acceleration zones, and you get the reversal scout. That is that line right in there, which is a great moving average that will help you with your directional decisions. You can see in here, while the market was going up strongly, well, the NASDAQ looked great. At the same time, the Russell was weak. All of it right in front of you and amazingly clear. In addition to that, you're going to get the AskSlim SIR Daily Technical Snapshot. This is a great piece of information in here, and it comes with a whole lot more, which I'll show you. As I open it up, you get information here every single day on the important key levels, upside levels, downside levels. In addition to that, you will get the trend and momentum technical evidence, which shows you short term on the daily charts, the intraday charts, the near term trend conditions, momentum conditions, and the condition of the reversal scout. Absolutely fantastic. In addition to that, you'll get a key 2-hour chart with the slim ribbon momentum indicators on there, which is just tremendous information, so that it helps with your directional decisions with a little longer time frame in there. So you use the 2-hour and the 15-minute often together to help you with your trading decisions. In addition to that, you'll get my annotated S&P charts, the daily chart you see right there, and you get all of that information on the NASDAQ and the Russell, all of that in there, and just this great graphic right over here that you see, which is the technical evidence comparisons, where you look at the S&P 500 and the NASDAQ on the long term trend and momentum condition, intermediate term, short term, and the near term intraday, plus our readings on our market condition indicator, our proprietary indicator. These are exceptionally high numbers right over there, as we've been in this very, very strong market condition. And this is a fantastic tool when you look at that. In addition, you're going to get our 2-hour momentum charts right there on the S&P 500, the NASDAQ, and the Russell. Just incredibly great information. And you can see down over here the market condition indicator also given to you right there. It's just unbelievable how much you're going to get here for level 2. Amazing. In addition to that, being a level 2 member, you get our whole library of videos. That includes FutureSpeak. Now, the value to index traders is that we do in-depth analysis on all 3 of the indexes in here, on the weekly and the daily, give you our cycle analysis, and we talk a lot about the correlations between markets. This is great information for you that you can get, and we do this every single Wednesday. We talk about 24 different futures contracts, and you will learn so much about cycle analysis and technical analysis in this video. It's just mind-blowing. But that's not all. You're going to get, and we're going to show you, the top 10 AskSlim tools for text videos for day trading, for short-term trading of the indexes. So we have this broken down for you to see. I'm going to show you what all 10 of these are. All of these will be accessible to you. Day trading setups in here that we're looking at with the purpose of raising your win-loss percentage, improving your win size versus your loss size, and your the relationship between win and loss. Just a great video. You'll be amazed by that one. This one in the Tools for Text is my favorite momentum study pair. I show all of the time using the slim ribbon and the projection oscillator. This one is going to explain that to you on how to really use that to your greatest benefit. Fantastic video that you'll see there. This one right over here is about a directional bias for swing and option trading using multiple time frame momentum analysis. So I'm going to show you that. You'll be able to use that for your swing trading in indexes. This one right over here is the AskSlim Tools for Text Improving Swing Trading Entries. We're going to look at Keltner channels and standard deviation, the slim ribbon, and projection oscillator. So I'm putting together 4 different tools in there, adding a couple to my favorite study pair. This one is setups for intraday swing traders, analysis of the 8-minute momentum chart. Very few of you are going to ever look at that, but when you look at this video, you're going to say, wow, there is some great information there, and you'll be able to use it. This one is improving your directional decision for scalpers with moving average ribbons and the SAR. You'll find that a fascinating one. Here is index comparisons. This is really ties in with our stock index report live stream, because it really shows you how to look at the different indexes and compare them and get a great sense for how to tell the stronger, the weaker ones, and how to improve your decisions on which ones you want to buy, which ones you want to sell. Short-term trading, help with direction also using my favorite studies, and I'm going to apply that to the intraday charts for this one. You'll learn so much. Chart setups for scalpers. This is a number 2, another one, and that's to help with changing volatility when things start to move around quite a bit. This one is improving entries, revisiting the swing high, swing low techniques. This is about finding those key areas of support and resistance and areas that you'll want to enter trades or maybe exit them. Amazing amount of information that we have in here. Can you believe that's all just in level 2? Plus you'll get everything in level 1 also, which is the great information we have in our momentum tracker for investors and our ETF report. There's just so much in there that you will get when you look at that. So great information that we show you. You want to get that. Well, we've had a trial running and it's now ending. So it ends on August 9th, which is, well, in 2 days. You can get, all of that information subscribing to level 2 or 3 or 4. You want to request a trial link. Well, you got to get in there fast because you got to get it into us by Sunday night, and then we'll know that you're interested and we'll send that to you. Or you could request a demo. That's a walkthrough of our content just by writing Matt at AskSlim.com. Matt, our COO, just a great analyst also, and when you talk to him, you'll be amazed as he walks you through the value of all of our content. So write him to request the trial link, write him to request the walkthrough of our content. That's Matt at AskSlim.com, M-A-T-T at AskSlim.com. Thanks for watching to this point. Man, I wanted to show that to you because there is just unbelievable information in there, and it will really help you improve your batting average, your overall performance, as we bring this great content, our analysis, and information. So thanks for watching that. All right, let's get into the Golden Cross. Golden Cross is is when you compare two moving averages. Now, the world out there, much of the world, watches a daily chart looking at the 50-day and 200-day moving average. And when the 50-day crosses above the 200-day, it's considered a golden cross. When it crosses below the moving average, so the 50 was above it and then moves below it, it's called a death cross. I want to examine this today because I've read so many articles that are out there pouring out about the golden cross that is happening right now. So here is that 50-day moving average right over here, moving above the 200-day moving average right here. But I want to examine this and maybe give you an alternative to something that you might use that might be of greater value. I want to explore this, and I'm going to be somewhat critical of it because if you look right over here, look at the death cross that occurred right over here. That cross, which gave you that negative reading, occurred on March 20th of 2020. The low right over here was March 20th of 2020. So this signal came right on the day the market low was made. Not exactly the kind of information you want. I'm going to show you more, and then I'll show you an alternative, but I just want to give you the sense that maybe if you're bullish and you've been reading the news that finally we have this golden cross, maybe there's a reason for not all that much excitement, because maybe these are not the greatest of signals that you could possibly get. Let's look a little bit further out in here, and we'll go into 2018 right over here. And what I want you to see again is that you see the golden cross, the death cross came right over here about 2 days before the low was made. That's in 2018. And then the golden cross came after the market had made a huge recovery. And you can see how late that was. I'm going to show you again some comparison to that. Let's just go a little bit further out and back in time for you to make some other comparisons right in here. And we're going to go way, way back over here to a time period that is actually similar to what we have right now in 2020, where you had a big decline in the market. Now, it wasn't a 35% decline like we're having right now, but it was pretty severe. And then you had a return where the market got pretty close to those highs. And you can see in here that the death cross came right over here, and the market made its low in about a week. The golden cross came over here, which failed. And then the market moved swiftly to the downside, and the death cross came just about the time that the market made its next low. So you can see in here, I'm almost showing you no time when the markets, when these golden cross and death cross came at a time that what was advantageous to you. Are you starting to wonder or be skeptical about the golden cross that we have right now? I can go out further to earlier times and show you that the market has had times when it has been almost valueless, and I'll go way back over here. Now we're looking at 2005, and I want you to see right there. Look at all of those signals as it crossed and crossed and crossed. Now, there are, almost every indicator you look at are going to give you bad signals. And in choppy periods, they're going to give you chop and bad signals. Well, you can see right over here, when you look at that, you have to be concerned about the value when you get these kind of signals. There are times when you get a golden cross when it's timely. You see that right over here and back here in 2005 where that came. It came late, but okay, and the market continued to move up strongly after that. And there are many times in history where that happened, that you got a good cross and the market continued in that direction. If you look over here, you can actually see that right over here where you got the golden cross that was really late, but then the market did continue on the upside until, well, the collapse. So I want to give you a little comparison, because what I want you to always have are tools that work for you, not tools that get you in trouble. Let's take a look here at a comparison. So this chart on the left, let me just zoom in a little bit right over here. This chart on the left is the same one I was just showing you. That's the 50-day and the 200-day. Now you'll notice on my daily charts that I use different indicators. I have a 13-day and an 89-day. Yes, these are a lot shorter. But you can see that they basically gave you the same signal right over here. The only thing is that this signal, this bear signal, the death cross, came right at the market made its low. If you look at the one I use, which is the 1389, the bear cross came right over here, where the market had moved down already, but you would have gotten a signal that caught that whole break. Now look at the golden cross occurring right over here that you can see. Let me just come in a little closer. And that golden cross right over there, which is happening right now and giving you a bullish signal. However, when you look at this one right over here, this bull cross occurred right there, and that occurred June 2nd. So while the market's been rallying, you would have had a bull signal, and you see right over here, it's coming exceptionally late. Let's just take a moment and go back to that time in 2018 that I was talking about. That is, maybe another time to compare. You can see that right over there, and I'm just going to go back over here to 2018 and make the comparison of the same kind of a market situation right there. So let's just look at the death cross right there in 2018 and the golden cross. And we'll look over here at the same time. So here you could see the death cross came right there. There were about 3 days left before the market made its low. Here you could see the bearish cross came right at this point, and this occurred 2 months before the market made its low. So you can see the incredible difference at that point. And now we'll just come a little further here. And you can see that where this bull cross came right over here on the 1389 was on February 5th. This one right over here came on March 18th on the 50 and 200. So again, we went into this bullish period in here, but this signal in the 1389 was much, much better. So I wanted to show you that because I really felt that this bull cross that we're getting right now, the golden cross that we're getting right now, is not it doesn't have to be a good signal. It might be, but you could have got a much better signal using my 1389 than this very, very old and antiquated golden cross that is, well, just not the greatest of information and not timely, that's for sure. So I wanted to show you that. I think that's pretty significant, and that is a review of the golden cross, which is the 50-200, and my two indicators, two moving averages, which are the 13 and 89 simple moving average, which I think gives you much, much better information. So I wanted to share that with you. All right, so now let's get into the short-term view for this coming week. I want to be always accountable. The last 3 weeks we did exceptionally well, not this last week though. The 3 previous weeks we were about 70%, 90%, 90%. It was great. And I look out at 2 or 3 weeks and I judge myself usually pretty harshly. This week we're going to only get about 40%. We were only really perfectly right on one market, which is the bond market. And as far as the light crude market, it didn't quite get the dip we were looking for, though it did move up as expected and got up close to the target that we were looking at. The gold market, we did not get that right. We've been so right on the gold market, but we actually thought it was going to dip for a couple of weeks and then move up. Well, it moved up, and now we're getting a little bit of a dip now. So it was kind of out of order for us, though, overall it was stronger than we expected. So we've been bullish. It's been right. We're just not going to take any credit for that one. The dollar, we're mostly right on that, as we thought it would get a bounce and move up for a couple of weeks. Well, it kind of went flat and then started to move up. So we get most of the credit for that. Our upside target, you'll see right in there. The bond market, we got that right. Came up almost to our target, just below it, and following the patterns we expected. And the S&P 500, totally wrong. And we've been wrong in that market now the last couple of weeks. And of course, because I'm affected by what I think is a longer term, intermediate term top that is due and overdue. And while I very much focus on momentum and always show that to you because that's really the key, my intermediate term bias had me believing that it would do less on the upside than it has right now. So we're going to review all of that as we now switch over into the other markets. We're going to start, that's the S&P 500, but we're going to switch over into the light crude market first because I want to do this in order. So here are market cycles. They're very clear in light crude right now. And there's lots of information in here that I think is incredibly valuable when you look at that. So these are the market rhythms that you see in here. Cycle analysis, these are just guides. It's a drawing tool that's on the bottom that helps us understand the movement of the market. Now, if you there's a principle that we look at that's called the principle of summation. And when you take the ideal right in here and you add it to the directional component, the trend, it resolves itself in this uptrend that you see right in here as each of these cycles move to a higher high. These last couple just only edging out the high as it's gotten into this big resistance area. So we get these swamp cycles where the upside momentum, and you can see momentum turns here positive in the slim ribbon, that is forcing it up. At the same time, the resistance up here is holding it, and that's why you get this flattening going on right over there. We're still getting bullish confirmations, and again, I mentioned the video earlier about using the projection oscillator and the slim ribbon. That's what this is. You're getting these buy or long confirmations right in here, positive momentum confirmations, and you still have that as you edged out that high. We thought it could get close to that 44 number. It didn't quite make it. And now what we're looking at is the potential for a little higher prices again, potentially testing that 43.5 to 44 area before it then starts to roll over. Momentum, as we see, it would given a little signal that it was going to go neutral here, but it gave that up and started to move up again. So we have that, just blow it up in here. You can see that kind of stronger looking pattern that we have right there with momentum saved itself. And some of the evidence is that it's still stuck. We're looking for intermediate range here of 44 down to about 38. The risks to the downside really come into later in August and into September, where we expect to get some bigger correction, probably down into the high 30s, that 38 support that we're looking at. So for the next couple of weeks, we're looking for attempted rally back up to those resistance levels, 43.5, 4, and then failing from there and beginning more of a corrective process. So the gold market, this has been just amazing to watch, and our analysis on this has been just stupendously great. And I don't mind saying that because, I say it when I miss it, and I say it when I get it. And this peak in here that you see is coming a little bit later than we would expect it. This is a right-hand translation. It's a swamped cycle. In other words, it just kept rallying, and now when it gets to the end of it, it moves down sharply. This is somewhat typical when you stretch a cycle. Think about that for the S&P 500, which has a stretch cycle also right now. And generally what happens is you get a couple of bars, 2-3 bars that are sharp on the downside. You can see in here the upside buy momentum right in there, confirmation. Actually, we have a buy pending coming in right over here, so I'll have to stretch that over when I redo the charts this weekend. And our target right now is 2017 down to 1973, and we consider this to be a buy zone in there. We don't expect it to be able to get below there. This is a bit of a shakeout after that upward panic to 2089. These were the minor cycle fib confluences right in here, which if you take the cycle projections, the fib projections off of this cycle and this cycle, they give you these right over here, and that's where it's stalling. We're always looking for ways to get the best information. So we're getting this pullback right now. We think it's a buy, and that it's likely going to get some footing in here, and then this rising phase is what we're looking at right in here. Now I want you to note the dashed line in here, that's silver. And the silver and gold corrective periods are out here in late August. That says that this rally coming up right in here is likely to fail and move down. So our 3-week projection is making a little bit of a bottom in here and then getting another rally up to this level close to 2100, just a little above or below, and then a maybe deeper correction right over here, and maybe that's a shakeout to set up another rally where these cycles then turn to the upside right there. So that's the look in here. We'll look over the next 3 weeks for or maybe come down early into next week, and then another rally setting up, and then a bigger correction right there. Pretty much we see this chop between 1970 and 2100 as a pretty strong likelihood looking at that. Some of the evidence formations are still very good, very bullish, minor corrections, and those corrections likely to come at the time when the dollar is correcting to the upside. A very strong day for the dollar today, and then overall I don't think anything severe in here on the downside, because the government is just going to do whatever they can, print whatever they can, create whatever money they need to try to hold it together. That's the Fed. I actually don't think that the government is going to be able to do much more on the fiscal side, as I mentioned early in the show. So that is a look at the gold market. For the dollar sign DXY, you can see in here that there has been a pretty good decline. Now, when you see dotted lines like that, that's based on revised. We had a widening dominant in here focusing on minor thirds. So here's your minor third. You can see that right here, and right here, and right here. They're each like music inside the dominant scale right there. How's that? And that is called the harmonic family. Now we're in this rising zone right over here. This was really late, and that forced out the width right over here on these cycles. And now it makes a lot of sense when we look at it. And we're getting this big update. It kind of saved itself from these double bottom right here. And then we're projecting up here to about 94.40, 94.50 over the next couple of weeks in there. Some of the evidence is that the dollar is in free fall. I mean, it's in terrible shape, and it's likely to remain there. As long as the Fed can fight the inflationary forces that they're trying to put in the market. In other words, there's an inflationary sentiment coming in the market that we see in gold and silver, but they want to keep the bond market at extremely low rates. Well, that's going to be horrible for the dollar and great for precious metals. So that's why we think these rallies are going to fail in here. So some of the evidence is the dollar is just sick. Negative momentum in all time frames that we're looking at. That's contrary to what we show in Future Speak show, where a month ago we showed the foreign currencies likely to move up and the dollar likely to move down. That was really a perfect call. And we think that rebounds are doomed in here, as the U.S. clearly is their plan is to export the deflation that we have right now. How do you export deflation? You bury your own currency. And that's what simply, they don't care about this falling dollar right now because they want to get other countries to buy our goods and make our goods cheaper. That is exporting deflation, and that is plainly market manipulation that they have no problem with. So expect the dollar to be much lower in the longer term. All right, now let's look at the bond market, which clearly has been easing its way up in here as the yields have now come down to record or near record yield, depending on where on the yield curve you're looking. We expected that we were going to see a rally up here to about 183.20. And it got very, very close to that and then begin to move down. Again, the bond market's got minor thirds also that you can see in here. And this right over here is kind of a widening pattern that we see. This is the old one right in here that we left in there to see if it was going to have an influence. It did not, so we'll be pulling it out of there. And then the market looks like to us like it probably tries to get up again a little bit more. But we think that based on where yields are, and the likelihood that the yields can't go much lower, that the bond market peak is not that far off. We were looking, some of the evidence really is that we were looking for a major bottom in yields over the next few weeks into mid-September. We think that top is either forming or will begin to form soon in the treasuries or the bottom in yields as they begin to look at this inflationary scenario that the government is trying to create. They're blatantly talking about it, and longer term, the curve is going to steepen under those conditions. They're going to keep the short end low. They don't have as much control over the long end, and what you're going to get is a increase in the yield curve, and that we think is going to be happening, even though they probably don't want it to happen, beginning sometime in September. So that's the sum of the evidence. For the shorter term, we're going to look for a little bit more attempted rally up in here, and then some correction, and then a little bit more attempted rally, as you can see as we get here. So choppy market that we're looking at. You can see the momentum in here is still strong right there. I don't have the buy signals right in here, but here's a positive signal. Here's a positive signal right over here. So this is a buy pending right in there, and we're likely to get one more little trip there before it gets a correction. So the next couple of weeks we'll look for some up and then some down in what has not been the greatest tradable market. So that's a look at the first four of the markets that we're going to look at here for the short term. Now we're going to switch over and we'll look at the stock market, the S&P 500. Like I said enough times in this show, we missed this call. The market was certainly much, much stronger than we had anticipated. Never figured that Apple, which is, the market's barely down today. Apple's down about $10, and again, investors barely flinch. The market is still quite strong, and even though the Nasdaq is falling hard today, the rest of the market is not, and we're getting this day where the Nasdaq is down a lot and the Russell is up a lot. Take a look at at our SIR live feed, and you'll see how clear that is for today on how you can see which one of those you'd want to be long and which one of those you'd want to be short. So let's just jump into this analysis on the S&P 500, and this strong market continues. That's not it. That's it. So here's the S&P 500, and we're going to look at these cyclical patterns right in here. So we have, this is really quite unusual because we have these cycles that are pretty perfect. You can see the timing right in here, the low here and here and here and here. The little minor cycle in there that is recognizable here, barely recognizable here, and this should have brought you some kind of a decline of some significance. You can see in here that on this one, it's so swamped and so strong, you only got a day or day and a half down. That's really rare. Well, this is even stronger right now. We said last week that we thought that the market would be down for the next 4 to 6 days. In other words, it would make a low about 6 days from last Friday. It had all up days. the upside momentum is just incredibly strong. I mean, the slim ribbon got positive way before this, and it continues. And you can see the strength right in here, the buy signal, all of these signals just powerfully strong, very, very contrary to what my biased analysis thought would happen. My bias being looking at the longer term trends in my multiple time frame analysis. That decline, I believe, is still coming, but we have raised our downside targets pretty significantly. They were down way at 2830. Now this is just down around just under 3100. That is barely even a 6% decline in here that we're looking for, and that's over the next 3 weeks. You can see in here this wedge pattern forming as the buyers just will not let this fall at all, and the lows are just higher and higher, and the highs are just higher and higher. We got up into this fib target zone that I did not expect it to be able to do, yet it does it. Up over here we have the all-time high right over here at 33.93, and you can see what we're projecting now, that we get a little bit of a dip here over the next 2 days. 32.96 is where that little 23.6% support is. This is 32.60. So we're looking for a drop over the next 2 to 3 days and then another rally. And this is not much of a drop that we're looking for in here. Some minor down days if we could get any selling coming in at all, and then moving up. Again, what we have here is a very, very strong swamped situation right in here where the upside momentum is so strong it's not allowing the corrections to come at all. Incredibly strong situation. This wedge right over here, this trend line is going to be significant. Now, I don't really think it's going to break right now. I think that comes out over here sometime in around the 3rd week of August or so, and then you get into that bigger decline, which probably is going to be pretty brief, the way all of this is setting up right now. Like I said in the beginning of the show, I went from absolutely sure that we were in a bear market to seeing conditions change in such a way that we are only looking for modest intermediate correction. Right now, we'll look for the next 3 weeks to bring us a small little dip and then further rally, setting up what we think is going to be that modest correction in there of potentially about 300 points in the S&P 500 on the downside into early September. Some of the evidence is that the time has grown shorter and shorter for the correction we're looking at. We still see that moving down into early September, but all momentum conditions are strong in all indexes. Nothing has changed in that regard, and until that does, you can't get a significant move to the downside, and you can see this incredibly strong structure, this bullish patterns that we're looking at in here, and this has to break right in here. The momentum get negative, and this fail in this zone over here in order to get what we think is going to be that pretty brief decline of some 300 points in the S&P 500 into the beginning of September. That is a very, very large upgrade in our analysis as the market speaks, and we're going to listen. All right, that's it for our information in here for this week. We hope that you thought that this was great information. Please do write Matt at AskSlim.com. Request a demo, request our trial links in just these next couple of days through Sunday night, and then he will send you those. And once he sends you those, you could still use the links even if it's the beginning of next week. So you'll be able to request a demo and use those links because we want you to really experience the kind of information that we bring to you. The only way that we can continue to thrive here at AskSlim is if you do. Your success is our success, and that's what we want to see happen for you as you continue to do fantastic. Make sure that you are incredibly careful. It is so crazy out there, and I'm always wishing you great trading.